Good morning. I want to focus today on the responsibility of associations and the financial reporting. So I'll go over some things briefly. And first of all, I'd like to explain that there's three types of management considered, right, for associations. One is full service professional management, and that is when a management company comes in and handles all the duties. The next type of management is professionally self-managed, and that is when an association hires a licensed professional manager as their employee to handle the day-to-day businesses. And the next and third type, which is one I want to concentrate on, and this message is for you, is the fully self-managed association, right? The fully self-managed association is where the board takes it upon themselves to perform all the duties, the inspections, the enforcement of violations, the accounting, vendor management, basically everything that management would do. Now, why do they do this, right? And this is very, very old school, and I recommend you steer far away from this type of thinking. Is they say, well, management is too expensive. Well, this day and age, there are certain standards that are expected, certain reports that are expected, and a fully self-managed association may not meet those. They also say, well, management costs too much and the board has a lot of business experience. We can do this. Well, you may have a lot of business experience in whatever business you were. Maybe you're a super CPA and an attorney, or you ran multiple companies, but that may not cut it, okay? What I recommend for those associations that want to stay self-managed in some type is to, at the very least, consider professional management for your accounting, okay? Management normally handles all those things I mentioned, inspections and violations and enforcement and things. But if you have a professional management company handling at least your accounts payable and your accounts receivable, you will be within the industry guidelines for reporting. So the main concerns would be that the management company provide monthly detailed statements. They handle all the accounts payable, so all the invoices you have to pay to your vendors and maintenance and such. They handle the accounts receivable. That means all the payments that the homeowners must make. And they can provide ledgers and reports and all that to every homeowner, which is an expected service this day and age. It comes with everything, okay? And there's invoicing, right? So whatever happens, there's an invoice attached. All of that could be recorded. You cannot get away with any more, and I hate to say this, I've dealt with associations that when I ask them, well, what's your financial report? Well, they say, well, the treasurer does an Excel sheet and they share the spreadsheet. Those days are gone, okay? A professional management company will abide by the industry standard for management of community associations and the GAAP, GAAP. That's the General Accepted Accounting Principles. So if you're a CPA, you know what that is. But you will be able to receive, the management company will provide financial statements, revenue recognition, expense recognition. They will be able to measure assets and liabilities. They will provide internal controls to prevent and control any fraud, okay? So internal controls are important. Segregation of duties, who signs, who doesn't, who approves. Very, very important. And guidance on vetting vendors, making payments, how to do everything properly, so that if there is a problem, a challenge, a lawsuit, all of that at least is documented. So the message for today is, if you insist on being a self-managed association, I recommend you at least consider a professional management company to handle your financial reporting, your accounts payable, your accounts receivable, okay? If you need guidance on that, if you need help, let me know, shoot me an email, get in contact with me. My name's Corel Costa Armas. Take care.